back with the market right here in ET. Now it's turning out to be a steady day of trade. We're holding around that 11,950 mark for the Nifty 50 futures. Breadth of the market is the one which is outperforming. Enables Housing up 4%, Idea up 3.5%, Infratel after it came out with its numbers holding up 3.5%. Adani Enterprises and Apollo Tyres are the ones which are seeing traction. On the flip side though, there's a Biocon, Shree Cement, Apollo Hospitals and Ambuja Cement, irrespective of that very steady quarter that they posted, and RBL Bank which is seeing some red ticks kick in for itself. But it continues to be metals which have been hogging the limelight, the big question being whether the metal rally has further legs to go. Base metals are already at a multi-month high. The China factor for base metals at play, and copper, which has now rebounded a good 60% from its lows. So let's try and analyze the prospects of the metals universe going forward. We have with us Paul Bartholomew, and we also have Jonathan Barratt joining in on the show right now. Gentlemen, morning. Good to have you on the show. Jonathan, if I could kick off the discussion with you, what percentage of the world's base metals consumption does China account for? Because we understand China's demand has already surpassed pre-COVID levels.
Absolutely. I think, good morning. When you look at China's thirst for metals, iron ore and metals and all that, it certainly rates up there in terms of, some very high numbers. I think with iron ore, seaborne, it's up to around about 65, 70%. That's for the iron ore market. For copper, we're certainly a lot higher or close to those levels. So I think anything that really happens in China in terms of those recovery stories are going to reflect very, very positively in the price of the commodity. So, and as we've seen, GDP, industrial production, all those positive numbers, it has to translate into demand for the primary inputs, and that's what we've seen.
Right. Paul, copper is often considered to be an indicator of economic strength, given the metal's pliable nature. While world economies are still, nursing the wounds of COVID, copper has galloped a good 60%. Would you say the China factor again is what's at play here?
Yeah, I think so. I think some people are sort of saying, the kind of China impact, has been priced in, and there's not really, a lot more scope for sort of prices to run much higher. But it's quite an interesting final quarter, really, because it looked like the wind was sort of coming out of China's sails in around about the second week of September before the Golden Week holidays, and then when they came back around about the 9th of October, everything has sort of picked up again. And I think there's a sense that that there's very, very strong sort of production, across a range of metals, including steel, but aluminium as well. And I think the fear is that there's going to be a bit of an oversupply, and it is economic performance and demand going to be sort of strong enough to absorb all of those metals. So. I think a feeling is it's probably going to be sort of steady as she goes, but we don't necessarily see things falling off a cliff necessarily. But I think it's going to be quite an interesting quarter, especially with the Chinese 14th five-year plan announcement coming out, or some of the details probably leaking out in the next couple of weeks might have some impact on the markets as well.
Jonathan, there are two ways to look at the surge in commodity. Is it real demand, or is this real positioning because of dollar interplay? Because on the same forum, Jonathan, about a year and a half ago when we spoke, we used the following words. China has excess capacity, they have been forced to mothball, their economy is slowing down, demand is nowhere close to what it was. So for a country which was mothballing capacity, which had surplus capacity, especially in the steel space, how come the wheel has turned?
I think when you looked at that spare capacity, what they are actually doing is doing what every other, economy is at the moment, is trying to weather the fact of the pandemic that's gone through. China is in a unique position, being a demand-related economy, that it can march when needed, and that's what they've done. The infrastructure programs which they're putting in have been ramped up. It is a form of stimulus, and as we know, that stimulus is sort of translating into demand for commodities. So I guess they've had that spare capacity. They're now enacted on it, and as a result of that, we're seeing this movement. The key, I think, is really how long are they prepared to keep that stimulus up, and how does that translate into more longer and deeper demand for some of these commodities, which are slowly starting to come in a little bit of short supply.
Paul, the concerns of a second wave, at least in Europe, is real. The kind of new COVID additions which Europe has reported, the data which we got from Russia 2 days ago, I'm not using the word alarmist here, but that is something which is going to have an impact on sentiment, activity and demand. Our markets or our metal markets getting slightly more complacent about what is happening on the medical front.
I wouldn't say complacent necessarily, but it's often the sort of caveat. When we're talking to people in the market, it's sort of they see the market going this way, provided there's not a second wave or whatever. I think one thing we have been seeing a bit recently is some of the countries around the world have been sort of recovering. We've been seeing some of the supply chains being restored. So, for example, Japan, China, their exports performance has improved quite a bit over the last month or so, whereas exports are pretty much turned off really for quite a long time because all the supply chains are sort of broken down. So we are seeing some of those kind of repaired now. But yeah, you look at Europe and there's so many individual cases and obviously what's going on in the US. But if you look at the US steel market, for example, their prices are absolutely soaring at the moment. They were probably the slowest of the economies to actually sort of recover in some respects, but they're up at sort of hot rolled coil $670 a ton now. So I guess there's just a lot of latent demand, pent up demand. The presidential election doesn't seem to be having much impact really. I guess but yeah, a lot of individual cases. But I think generally speaking, if you look around, things are getting better. I don't think anybody's too complacent. I think everybody realizes we need a vaccine before we're out of the woods, and most people are not anticipating that until sometime, hopefully, early next year.
Okay. Jonathan, when it comes to aluminium and nickel, for example, we have seen the rebound accelerating in the last couple of weeks. Do you see a further catch-up there?
I don't really think so. I think once you've got that general trend of the market wanting to really take it higher, I think that'll translate into demand across the whole complex. When you look at nickel, obviously a primary input, as with iron ore as well, you can see those markets are being dragged up. I guess that you get a sense that this is a commodity boom again. We're all very cautious to say that sort of words, given we know that it is just pure stimulus that's actually causing it. But at the end of the day, the stimulus that's been applied to the demand for these is actually translating into that infrastructure which is badly needed. So in my mind, it just creates that base for the economy to be able to really sort of tidy up those inefficiencies which it has had. And I think as long as that stimulus is there, that's going to translate into bigger demand. Also, let's note what the US is doing on its stimulus side as well. If they can get through with the funding, it's all clear, then once again, we're going to see more demand coming through these commodities. So I think that, yes, we will see that follow through. I think that follow through is here because governments will continue to stimulate. As long as they've got that process to be able to stimulate, they will. And with that, we should see higher prices.
Okay. And Paul, how much more room? Is there a way to quantify perhaps how much more demand or is it too early to tell because we're still seeing the effects of the stimulus programs play out? Also on the China-Australia dynamic at the moment, how do you think that's going to play out for base metals, if at all?
Obviously the coking or coal in general and coking coal has been the sort of the big talking point. We should have been talking to the people in the market and asking them, about iron ore really. So iron ore, China absolutely relies on Australian imports, whereas it doesn't really with, at least with coking coal. And the feeling was, there's no way really that China can stop Australian imports of iron ore. So. Yeah, I don't know. I think the sort of feeling is people we talk to that probably once you get into sort of next year and some of those import quotas are sort of released again, that there may be a bit of a relaxing of some of those restrictions you're seeing on on Australian imports. But you're certainly seeing it in other areas as well. Cotton and different agricultural products, and fortunately the relationship is not great at the moment between the two countries. So hopefully things will improve there. So haven't heard anything specifically on other things. Coal sort of seems to be the big one in the in the kind of metals space.